You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. It's time to do it. It is time for the option block, our bi-weekly source for all things options related. My name is Mark Longo, coming at you live every Monday and Thursday here for the option block. A lot for other shows as well throughout the week, but for this show in particular, every Monday and Thursday, noon Central, 1 p.m. Eastern via Mixlr. Get it there. If you want to listen live, of course, you can always get the old podcast wherever you like to and enjoy subscribing to your favorite shows. Our website has it all. Our mobile app has it all as well. So if you want just one nice, easy place to get it all, go forth and prosper. However you listen, make sure you hit us up. We do like to hear from you guys, and make sure you vote in our polls and all the other fun stuff that we do out there. We do enjoy getting your opinions, sampling your ideas on a wide variety of topics. So hit us up, send in your questions, vote in the polls, do your duty as an audience. And if you like what you listen to, make sure to leave a review on whatever your platform is you're listening to. If you don't like it, like the meatball or something, just don't worry about it. But if you like it, leave us a review. We don't really read them, but they help for the algorithm and stuff. So head on over there, go forth, and make yourself heard. Speaking of making themselves heard, let's see who we got to make themselves heard on the old show today. Let's spin the old wheel. Let's go in order. Actually, I don't know if it's order proximity because I don't know where everybody is, but I know where one of them is. Let's go out to the provincial hamlet known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Program A, sir.
Always happy to be back at Ye Old Program. First day of Q4, and one of my favorite months of the year. Fall's always a very exciting time in the Midwest for a variety of reasons. I love it.
A little bit of background noise bleeding in there, which means we must have the meatball joining us from some sort of remote location. Let's see if we can get him cleared up here on the background. Well, let's see. While we're getting his stuff sorted out, listeners, oh, there he is. Mr. Meatball, are you there, sir?
I am here, and I am happy. I am getting ready for a big, huge Cubs game about to start. I know that your Yankees are already in. Are you a Yankees or Red Sox guy? I forgot.
I am neither. I'm agnostic. I grew up in a family of Yankees fans, though, if that makes you happy.
There you go. Well, There you have it, folks. Well, explains a lot that you're related to Yankees fans.
There we go. Yes, it does explains all. The deep morass that is my psyche. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what's on your collective tape. I can talk a whole bunch of things, indexes, VIX, maybe some single names, a bunch of them popping off today. Most of the major indices in green as we're looking at this revised NAFTA. They have some new name for it. I think it's just the Mexico-Canada-U.S. trade agreement that rolls off the tongue. Something along those lines. So the market kind of liking that, maybe a sign of the easing of the trade war out there. Most of the major indices up 0.5% or right around there. S&P right in that sweet spot, 0.5%. Nasdaq up a little bit less than that, about 0.4. The Dow up about a little bit less than 0.75%, leading the charge today, percentage-wise at least. Excuse me. VIX cash hovering right exactly at the 12 handle, off slightly. It was off more intraday, getting down to almost 11.5 intraday. A little bit coming back there in yield. VIX cash, our old friend VXX, off about half a handle as well. Had broken through the 26 level ever so briefly, down to 25.85. Now right around 26 and a little bit of change up there on the upside. And of course, the one making all the headlines these days, our old friend Tesla. I know we're going to get to the mystery puts out there, but in a little bit in the odd block. But our old friend Tesla just on the rampage yet again. 41.5 handles to the upside, or about 15, almost 16%. North of the 300 level, yet again, 306.25. So for those of you playing the home game, in just a span of a couple of days, it has gone from 260 on the downside up to 311 here, today on the upside. So 51 handles in the span of a couple of sessions, all due to our friends over there at the SEC. We'll get into all that in a second. First, let's go around the horn and see what's hitting, everyone's collective tape. Let's start with Uncle Mike. Sir, what's on your radar for today, sir?
Well, I think the trade deal right now is the big news of the day. It doesn't really come as much of a surprise. The media has been kind of preparing us for it over the course of the last couple of weeks. But the fact that we are sitting at the table with Mexico and Canada, and it looks like we've come to agreements with them, and I think the market is viewing that as a definite positive. But in terms of the trade war that is going on with China, obviously that's going to be the big one. I think that when we have some type of agreement with them, it could be off to the races for those of us in the bull camp. I think another story that something else that's kind of catching my eye right now is the slippery stuff, crude oil. Oil is definitely over the course of over the course of the last couple of weeks, we've definitely had a little bit of a rally on it. I think that we are at a key point right now for those of you technicians out there. July, we hit highs on the year of 75.27, and we have a shot at touching those today. We're right at this. We're just knocking on the door of the 75 mark in oil, and if we get some new highs, there's really a lot more potential room to the upside with oil. So I think oil, the macro news about the trade deal that's happening, and those are the big things that are coming across my tape right now. Of course, technology is always something to look at. We have Apple up just under 1% on the day, and looking forward to hearing what Mr. Seabass has to say about this VIX thing we got.
Yeah, well, and Mike, I want to throw back. I have a little kind of mini oil discussion with you, if you don't mind.
Let's talk oil.
So, you probably maybe know a little better than me. So one of the things I'm debating, right, the last time oil was as expensive, or we're starting to rally, right, 2007, it basically caused a lot of people to realize the precursor of the entire debacle of 2007, 2008 was oil going to 140, right? That's what really set the economy south, which really then caused nobody to be able to afford their house, which then blah, 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 set the whole chain event. It was the first domino, if you will. Maybe things would have happened the way they were going to anyway, but maybe not with the speed and maybe not the same timing. There's a lot there. So
definitely a major factor. Totally agree.
It really was. 10 years later, the big difference is that we are now the largest producer of oil in the world, along with Russia and Saudi Arabia, right? And at this rate, we're going to overtake them. So my question is, and I think it might be higher, is there a sweet spot for oil in the 80s or 90s where it's actually a net benefit to the U.S. economy, even if gas prices go a little higher? At what point does oil actually help the economy? It was very clear that oil in the 40s was actually bad for the U.S. economy. So where would you want, if you want the Goldilocks oil price, where is that? Is kind of my question for you.
I remember I've had this discussion for 15 years and still don't have a resolution to it. But like what you mentioned, the key to this is that now that we're the largest producer of oil in the world, that's where we do have differences. In years past, I remember what we would always say would be along the lines of, is higher oil good for the economy? Well, you could argue that if it goes very high, like to 140, no, it obviously was a bad thing. But if it's in the 30s, then what that does is that lowers prices of oil stocks, which could be kind of an effect of lowering stocks in general.
Right.
So in terms of
that was the argument 10 years ago. Now the big difference is that, we're now back to where we were 100 years ago when Texas was a booming oil drilling mecca. Right now, we're speaking of Saudi Arabia, right? So how do you think that our oil production is now so much of our economy? How does that change the equation with where we are, you think?
I think the equation changed back, when we dropped to those, what was it, 43 or so in crude. Not that doesn't seem that long ago now, but it was a little while ago, because we saw the efficiencies in the production. And again, if you like this kind of talk, listeners talk about this a lot. A lot of crude on TWIFO every Thursday, noon, actually 1:30 p.m. Central. There, or just check it out, of course, in your podcast provider of choice. But of course, we've seen the efficiencies in production across the way, in traditional wells, indeed in shale as well, has really improved. So that now with crude around these, low to mid 70s range here, at least in WTI, these wells are actually profitable at these levels. So I don't think we need even much more upside. Plus, right now we have this weird scenario where all the wells, everything's almost pumping at capacity. What we're missing is the ability to actually distribute it. The pipelines are maxed out. The shipping is maxed out. We're kind of at a little bit of a bottleneck here in the U.S. in terms of we could produce more, but it's not going to be able to get out to where we need it to. We're kind of at max distribution capacity. So we're kind of in this weird scenario. But you're right. I think that little bit of a shock to the system. It looks like Saudi Arabia may have ended up hurting themselves in the long run. They thought they're going to shake out a lot of these contributing producers. And they certainly shook out some, but they also improved efficiencies across the board for a lot of the existing producers. So they ended up making maybe a healthier, more robust, competitive ecosystem for themselves, which is probably the last thing they wanted to do in the long run. But I'm curious about you, Mark. I think seems like there's a little bit of a ceiling in this near term 75 to maybe on the upside 80 level.
Yeah, I think 80 is about upside. You start seeing some selling. So I agree there. Yeah.
Well, especially since we've had the run up from the 20s in early 2015.
Well, yeah, people are going to start. You're going to start seeing new wells pop open. Really, the question is, can we refine it? When was the last time they built a refinery in the U.S.? One of the biggest issues we've got from an economic standpoint is there's nobody refining the different pieces of oil. There's a big shortage of the additive for jet fuel, which also is an additive for premium gasoline, which is why the spread between regular and premium unleaded is so high, folks, if you didn't know.
Yeah, I don't know if you heard of this thing. It's called NIMBY, Mark. Everyone wants cheaper gas. No one wants a crude refinery in their backyard, right? So I don't think we're destined to have any. I don't think any politician wants to go back to his people and saying, by the way, I'm putting a refinery in your district. That's kind of a non-starter, it seems like, across the board. So you're right. We are in this kind of weird scenario where we probably could use a new refinery, and yet we haven't. Yeah, so we're in this kind of weird scenario, and too bad we can't get you on TWIFO. We talk about this stuff a lot on a show like
that's
like
weird.
That.
Why? I wonder why I'm not on TWIFO.
I have no idea why you would be uninvited to a program like that with such large corporate entities involved. But yeah, this is an interesting topic. I want to touch on really quickly to another one that's on everyone's mind before we get out of the trading block here, which is of course this madness in our friend there, the T stock. Of course, since our last show, SEC came out with this very hyperbolic, very kind of uncharacteristic press conference alleging all these very, very dire things against the Tesla CEO, Elon Musk, that he was kind of unstable, that he announced this price of $420, I think as they used in their own language, because of its relevance in marijuana culture, which is not a term you hear from the SEC very often, usually a very staid, very buttoned down organization. They said he announced that price because it would make his girlfriend laugh. I mean, these crazy allegations. They said effectively this guy should never be running a public company again. He's a danger to himself and others at the wheel of these things. And they were seeking all these grandiose things. Big raging press conference about it. So making this guy sound like he's the worst thing ever to happen to a public company. And then, of course, 24, maybe 48 hours later, not even, they announced this settlement for a fairly paltry amount, at least for what this guy's worth. $20 million is a relatively slap on the wrist for him. And then he has to give up the chairman spot only for 3 years, though. He gives it up for 3 years. Then he can go back and be chairman again. And then, of course, they have to have a couple independent directors, which that's probably a good thing. But at the end of the day, I don't know. I kind of got the feeling that this was maybe the SEC doing a little bit of grandstanding, taking the opportunity to say someone who's very popular. I mean, how often do they have a big press conference announcing these types of investigations? Not very often. So they take advantage to get a little bit of headlines. They paint this guy as the monster of all monsters. So which is it? You know, if he's this horrible guy who shouldn't be running a public company, then maybe you should stick to your guns and go after him. If he's not, then you're just wasting everybody's time and trying to get a little bit of ink and publicity and maybe a little bit of cash for your organization in the interim. I don't know. Do you guys have a similar cynical view on this, or am I alone here?
I mean,
I've typically had a cynical view on the SEC.
Yeah, I mean, I think that he got off pretty light. The fact that they let him stay as the CEO, I think, is kind of the shocking piece. I like that they're getting the independent oversight, but, you know, this is a loved company by, like, you know, the people in power and a lot of the government, and so it makes sense that they would quickly cut a deal. $40 million and new corporate oversight, and he's not allowed to tweet without about company stuff without the company saying, okay, all right, I'm on board with that. Fine by me. So
yeah, certainly the bulls like it today in Tesla. Like I said, this stuff rally ho mode like crazy. It just seems like all of this was a lot of Sturm und Drang simplifying nothing out there. The people saw a chance to get some headlines. They took it. And I don't blame Tesla for settling it. They want to get it out of the way. They can't. They're for all the headlines they get, they're still a relatively small company, and they have production issues. They can't be dealing with an SEC investigation as well. So I get why they'd want to. It makes sense why they want to get it out of their way as fast as they can. Well, why the SEC dragged all of us through the SEC in the course of investigating Tesla, Musk moving the stock 60 odd handles with this tweet, did exactly the same effing thing. They crushed the stock 50 handles or whatever, and then rally it up again in the course of this whole theater that they created. They should investigate themselves for causing these ridiculous movements in the stock. I don't know. Call me cynical, but this whole thing has left a bit of a bad taste in my mouth. As we're talking Tesla, let's get to it. Let's see what's going on in the crazy put world. It is time to go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's get into it. Let's kick it off right where we were. No reason to leave. Let's go into our old friend, the Teslers. Like I said, they're in rally up 42 handles right now, or over 16%. Well, let's get to our mystery puts. See what's going on. Oh, yes. They are rocking and rolling today. So if the question out there on the Twitters is, are the Tesla mystery puts lighting it up today? The short answer is yes. Talking about our old friends, the Jan 2019 50 puts, 75,000 or close to it on the tape, almost 5,000 on the open interest, almost 5,000 hitting the tape today, 4,708 to be precise on the tape as of right now. I'm sure more were coming after showtime here. These things are trading around 76 cents. Let's see how they fared over this. They got as high as $1.42 back a couple of sessions ago. So they pretty much they moved by doubled and then got cut in half again in the course of since the last time all of us gathered around the old option block table. So that's just a lesson for you listeners in how options like this, which have a delta of, shall we say, negligible, can still rock and roll and double and then be cut in half again, all off the power of things called volatility, which is amazing. 76 at 79 cents right now. The quarters actually fairly light. The 20 is doing about 550 on the tape today. Those are about trading around 20 cents. 19,000 open there. And nearly 500. The 10s also hitting the tape today. Those are 8 cents at a dime. Those are 30,000 and change open there. Also worth noting about 1,000 of the pars. The par puts going up today as well. Those are 43,000 open on that strike. Let's go all the way out to 2020, see what's going on there. Sometimes cooler heads prevail when you get all the way out to 2020. That seems to be the case today. The par is lighting it up in 2020, 450 on the tape, 28,000 open there, 185, almost 200. The 50s going up, 26,000 open there, 200 each almost of the 20s and the 10 puts, 19,000 and 7,200 open respectively there. So yes, mystery puts are lighting it up yet again. You know, when you got mysteries going on in Tesla, mystery puts trading it up as well. All of this is just head scratching sometimes. Not just the puts, but the whole thing. Getting mad at Tesla, at Musk, removing the stock and whipsawing the stock, and then the SEC does the exact same thing, almost to the exact same degree as well, which is kind of funny. All right, let's move on before my deeply cynical side takes a hold of me here. Let's move on to other stuff, more clear, cut, and dry stuff out here. What's lighting up our tape on our options scanners? You know, we always have our eye of Sauron scanning the market. Picture that big tower there of Barad-dûr. You got the eye glowing like in the Lord of the Rings movies there. Scanning, always scanning. But not just Mordor, we're scanning everywhere, looking for good stuff on the old options tape. We come up with a few interesting ones this morning in the early part of the session here today. Let's kick things off with everyone's favorite. I think it might be a newcomer to the odd block. New Age Beverages Corp, ticker symbol NBEV, trading today right around $7.60, up 2.25 or nearly 42%. I'm guessing this is kind of like a crunchy granola beverage company. That seems to be what they are. They are a healthy, functional beverage company, whatever that is. They make Aspen Pure, Buka Live Kombucha, all kinds of, gluten-free, organic, very crunchy granola beverages going on here. Let's see what's going on from an options perspective. This name actually trades it up a little bit. They average nearly 6,000 contracts a day. So for a name that till yesterday or till today, it was trading in the $5 range, that's pretty decent paper. Today doing about 35,000, 3-to-1 calls over puts. Not surprising. This thing's kind of on the rampage today. I didn't see the news of this is the takeover target or what the deal is, upgrade, whatever the heck's going on. Something's driving our friend at New Age Beverages Corp to I don't know if it's new highs, but it's pretty decent levels here right now. And as you might imagine, looking at the strikes, everything's lighting it up across the board. You pick a name, pick a strike, pick a month, pick a strike, I should say, and they're doing some paper. But some of the big strikes that are lighting it up, what first caught our eye is kind of interesting. The OC 2.5 puts, yes, the 2.5 puts, lighting it up to the tune of 3,600. Going up today. Looks like a lot of that is kind of, as you might imagine, giving up the ghost. A lot of sales for around a nickel. Hitting that bid while you still can. Now they're at a nickel, so those of you who are looking to close out on that strike, you kind of missed the boat. We saw a lot of these trading not too long ago, about 4,500 trading back about a week ago on the 24th. They were trading for about a quarter then, a lot of those opening buys. The OI pretty much doubled on that day there. So people were coming in, looks like specking on some maybe near-term, maybe hedging, but probably specking on some near-term downside here in good old NBEV. And looks like that paper giving up the ghost today here on the put side. Of course, that's far from it. We also seeing about 3,500 of the 8 calls trading today, 2,500 of the 9 calls, 1,500 of the 10 calls. So pick your month, pick your strike. There's a lot going on. But those puts kind of caught our eye, which is kind of interesting. Again, another sign of perhaps some ill-timed paper. Size money, not always a smart money. Someone asked us recently, what percentage of your UA that you cover actually wins? That's a good question. I don't know, but I think it's a pretty small percentage, quite frankly. And of course, defining win is sometimes hard for all of these trades, but still, at least on the options leg, which is where we're looking, not a lot of them. All right, here. A year ago, this thing was trading $3.12. So it's moved quite a bit since then, and it's kind of vacillated in that range for most of the year, as you would expect for a $3 name, not moving a ton. And then, looks like about the 17th is when things started moving. It got down to $1.65 on the 14th of September. So this thing has just been on the rampage of late. And then it started moving to the upside and moving, maybe a bit of a squeezy. What do you like to call these things, Mr. Meatball? A squeezy, McSqueezerstein, something along those lines. Got up to nearly $10, $9.99, before vacillating around back to 4 and now back up to 7.5. So this thing's been all over the freaking place. Close and puts is just the beginning of the story. Mr. Meatball, if you have any thoughts in particular on NBEV, but before we even get into the puts, that's fine. Go have at it. And then B, what are your thoughts on someone perhaps having a little bit of some ill-timed put paper ahead of all this palooza here?
I'm going to guess that this was lined up with a bunch of stock buying, and that would be why the puts lost. That would be my bet. I don't know that, stuff like this doesn't happen in a microscope. So, and it doesn't happen by itself. So, I would be interested to see what the stock activity looked like in and around this trading.
I'm looking here for some news. I see some stuff about them attracting more institutional interest, but that's a lagging indicator, obviously. So that's not what's driving this, unless size.
No, it was probably the interest was grabbed, all the stock was purchased, and the news story came out. So that's probably what that move is the institutional interest.
Oh, this is this is linked to everyone's favorite sector these days, the cannabis sector. They say this one is up on robust volume. Speculators moving back in. This is from a week ago, after stoked by the jump in Tilray. So apparently these guys somehow are linked. Maybe these are the ones that are going to make one of those CBD beverages, something like that. I don't know. If someone's going to do it, one of these crunchy granola beverage providers is probably the one to do it. So that could be probably what it is. They got caught up in this whole storm of the cannabis industry just taking off, and it sounds like these guys are on the radar as well. So maybe someone thinking last week, all this is overdone, I'm going to gobble up these puts, and then I can maybe see why the headline would cause that thought. And then fast forward a week, and not so much, giving up the ghost for a nickel, and happy to get that, it seems like, as this thing just continues to be just madness town, I think is the technical term for this stock. Let's go on to a name we talked about before here. DXJ, this is the WisdomTree Japan Total Dividend ETF out here. Trading today $58.78, up about 1.5%, or not quite a handle here, but close to it. It does about 5,200 contracts a day. Today doing about 28, almost 29,000, 13-1 calls over ye old puts. What we saw was kind of a bit of a combo, actually. They weren't all related, though, which is interesting. This went up. These are the big trades in DXJ today. First off, again with the puts, kind of fun. 57 puts trading 2,000 times for 11 cents, all opening. And the market at the time was 4 cents at 34. So take your pick on where these went up. Probably buying these bad boys, though, because they're 4 cents at 8 right now. So they probably bought these things for 11 and are now wearing them to the tune 2,000 times. But that's not all the paper that went up today. No, also looks like maybe a bit of a time call stupid as well. Starting off with 15,000 of the 58 half calls trading for 90 cents. That's near the offer. Going up, marked stopped IM. I don't think we've talked about that condition tag before. Maybe we'll have to talk about that a little bit. And also, about an hour later, we saw 10,000 of the 59 calls going up for 75 cents, also on the offer. Doesn't seem like they were legging into a vertical. Seems like they may have been buying both, especially with the strike. Who's going to buy $15,000 a $0.50 vertical? Doesn't make a lot of sense. So looks like they're legging into a stupid, doing it total of 25,000 times here. Let's look at the chart for DXJ, see why someone might be so inclined to do such a thing. And a year ago, we've got it. It was trading not that far from where it is right now, 54.5. Got up as high as about 62 back in January. Then we all know what happened in February. Took a bit of a clipping, got down to 52 again recently, and now rallying back up to 58. So, Mr. Meatball, what are your thoughts? Do you think this is a stupid? Do you think this is a ratio 15 by 10 $0.50 vertical on the upside? What are your thoughts here?
I mean, that's what it sounds like. And, there are a lot of weird, you'd be amazed what kind of weird ratios you see. Again, it's probably related to stock. And, somebody is setting up something where, they want this position here and this position there. So, I think people would be surprised how often odd type of ratios go up.
Yep, sometimes they just want to be where they want to be, or they want to line up some sort of premium thing to make it work out.
Exactly.
Something along those lines. And so the numbers follow the premium. The premium is the guide to all here. Let's wrap things up with AVEO. AVEO Pharmaceuticals, another cheapie. This one trading $3.05. This is kind of the opposite of the other one we talked about earlier. They were rally ho mode. This one's in a little bit of a sell-off, off about a quarter of a handle, or nearly 8%. On today's activity. Let's see, this name does about 4,200 contracts a day, trading nearly 19,000 today, 5-1 puts over calls, and that's pretty much all of this coming in this kind of funky, looks like this guy might have, again, not spreads, but looks like well-timed, maybe legging paper here. We got someone picking up 5,000 of the NOV 3 puts, so pretty much at the money puts now for 85 cents, right near the offer, also marked up as stopped IM on the condition tag there. And then we see about an hour later, paper coming in, selling 3,000 of the NOV 2.5 puts for a surprise, the same price, 85 cents. Funny how that works. Get a little bit of a sell-off in there, buy some puts, they go for you. You get to leg into, looks like a $0.50 put spread here for nothing. On this one, at least 3,000 times. You didn't get all of it off. You got 3,000. And then later on, we see 2,000 of the NOV 2 puts trading 45 cents. So obviously not 85 cents. Those are actually marked as a buy. It looks like they went up near the offer on that one. So it is possible he bought on the end to have a little bit extra kickers. Let's see, when those went up, what was the market there? They were. That doesn't seem right, because they were 25 cents at 55. So that looks like they were probably buying those bad boys. So interesting, buying 5,000 of the puts to kick things off on the 3 side, selling maybe 3,000 of them against it for the same price, doing it. So now you got 2,000 net open, and you buy 2,000 more of the 2s for 45 cents, which is kind of interesting. Bit of funky legging going on today. Not a lot of spreads, more funky legs. Let's look at the chart here, see what's going on here in AVEO. This thing was trading about 380, 365 about a year ago. It got down to as low as $1.91 back in April. Then it's kind of been on rally ho mode again, back up north. It was trading $2 not too long ago, got back up, broke the 3 handle, looking good, 350 or so a couple sessions ago, and then kind of just getting clipped. Got down to 280 actually today. So this thing's kind of had a bit of a run for a cheap name. Again, cheapy pharmaceutical stocks. Go figure. So I got some vol. Mr. Meatball, what's your spidey sense telling you on this one? You think this is the same guy, probably legging the first leg, and then probably the same guy again, coming in? You think he's buying or selling those bottom 2 puts for 45 cents?
I'm going to guess he's selling them, right? Don't you think?
It seems that way. I mean, all the indications are leaning the other way, but my gut is telling me I would think he'd want to sell those.
Yeah, I mean, that would make the most sense. And, it kind of depends. It could have been facilitated by a bank or something like that to kind of get the whole thing done. Who knows what commission this guy is paying, and, there may have been maybe a stock tie somewhere. But, this doesn't make sense, I think, unless he's selling.
Yeah, I like it better that way as well, because it then all lines up nice, and we have a nice, neat package, a nice, neat story to tell ourselves, which is always fun here. But we'll keep an eye on our friend here to see what he was really up to as we mark him to be washed. And we keep on rolling. It is Monday. That means it's time for Uncle Mike to take the reins. I have no idea what he's going to talk about. It's a mystery to me as well. Let's get to it. It is time for the old block of strategery.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where Uncle Mike takes the reins here and discusses all sorts of good strategy. Uncle Mike, I'm kind of vamping for a second. I'm trying to see if I can find the end results for our poll for last week. It kept going for a while after the show, and to see exactly how it ended up, but it's not coming up to me anytime soon. That's the downside of putting up a lot. So, Mr. Uncle Mike, while I'm looking for this, what do you feel like holding court on today, sir?
Today we're going to do Investing 101. We'll get back to the Twitter polls in the next week or two, but I just wanted to go through something today just because I've had a lot of clients that have and prospects and new people and clients that have come to me from just a lot of different areas lately of where they are with investing. And I kind of want to just give an overview of a few things of what I think everyone does need to know when it comes to just investing in general. The first one is that there are four major asset classes that exist. Now, you could argue and make them into other asset classes, and there are some other minor ones, but the four major ones, at least that I like to look at, are as follows. You have stocks, you have bonds, you have commodities, and you have real estate. Pretty much any investment in existence, in my opinion, could fall under one of those four things. Now, an example of stocks, of course, would be to invest in Google, Apple, the S&P 500, the Dow, whatever you want to call it. An example of investing in bonds, you have corporate bonds, municipal bonds, as well as government bonds, as well as federal government bonds. There's a lot of different ways with which to do it. The concept of stocks is that you actually own the company. Or the fund, if it's a variety of companies. The concept of bonds is that you're acting as the bank. You're essentially giving somebody a loan, whether it's the U.S. government, a municipal government, or a corporation. Third category of assets would be commodities, such as gold, silver, coffee, cocoa, sugar. There's a wide variety of commodities in existence that you could invest in one way, shape, or form, as well as real estate. Real estate, of course, is property, whether you're investing in business properties, residential properties, whatever the case may be, that is what you are investing in. Now, what we talk a lot about a lot on this show is the sector that exists that is within the stock market. Now, the reason for that is because that is what a lot of our listeners are interested in. We talk a little bit about commodity options on this show. We've talked about real estate. We've talked about all four of them, but primarily what we're dealing with is in the stock world. Now, the thing that I want to point out with this is, first off, anyone that's listened to this show at least twice understands that my main focus in investing is in the stock market. I do some things with silver, of course, and other things as well, but primarily where my main focus is for not only myself but also my clients is in the stock market. And the reason for that is that we are going on a 100-plus year bull market in stocks. Now, of course, stocks can go up, stocks can go down. There's no doubt about that. However, over the long term, there is no other major asset class that has outperformed stocks within the United States. And it's because of that I believe that it shouldn't be where all your money is by any means. I know all of my money sure isn't in stocks, but over time, that is one area with which we have had a very consistent rate of return. And by consistent, I mean inconsistently consistent. There's a lot of people that try and figure out, we've never had more than 4 up years or 3 down years than 2 up years, and you can come up with all sorts of formulas. But over time, the one thing that has been consistent is that stocks have performed very well throughout the last 100 years. Now, with that being said, does that mean that you should invest in real estate or you should not invest in real estate? Well, not necessarily. I had a client recently that was telling me about a real estate investment, which he ended up doing. It sounded very interesting, but have an understanding of the place with which it's in. And that's kind of the gist of what I want to talk about today, and the major point. That is leverage. So with that being said, let's say that you invest in SPY, and I'm not talking about stocks or options or anything like that. You just buy ticker symbol SPY. Well, when you're doing that, you're investing in this wonderful stock market that I was just talking about a moment ago, for better or for worse. It could be a good thing. It could be a bad thing. Of course, you never know. But you're investing in over 80% of all of U.S. business and commerce. Should the market go down 4, 5, 6%, or 20, 30, 40%, you still own this, and you still have the ability to make it recover. Or not to make it recover, but for it to recover. Now, should you buy something like that close to retirement? Well, that's up to you and your financial advisor to decide. Where leverage comes into play oftentimes is in the real estate world. So, for example, let's say that you're looking to invest in an apartment building, and you're looking to put, say, 35% down on this apartment building that you're going to buy, but with the rents that are there, you're cash flow positive on it. Now, that can be a great investment, and I'm not trying to make real estate investing good or bad, or any of these things good or bad for that matter. I just simply want to provide education. Oftentimes, and I just kind of went through this with the other person that one of my clients was investing some of his money with. It was a small amount, and I actually think it was a good investment for the client with what in his situation. But the thing you need to realize is that there's leverage involved. If you come down, if let's say you're looking to sell your investment in a few years, and this real estate investment is down 10%, let's say, then it's going to be amplified in terms of how much money you get back. Now, of course, there's a lot of factors involved with cash flow, but let's just say that you bought something with 35% down. If that investment goes down 10%, you're going to be getting 25% of it back. So in other words, let's say you spend $350 on this, because for every $350 with which you spend, you're going to get $250 back. And that's pretty significant. That's almost 1/3 of your investment is gone when the overall investment is only down 10%. Now, with that being said, of course, you could make the case, well, what if you bought stock on margin? Yeah, you have that same issue if you were to buy stock on margin. So that's the other thing with which to consider when comparing stocks against real estate. Now, how do options come into play? This is where I wanted to end this today's strategy block, because I feel it's very important. I have a very aggressive strategy with which I've talked about on this show many times. And I've had clients this year, not surprisingly, saying, well, why don't you just put all my money in your aggressive strategy? That strategy is up way more than anything else that I'm doing this year by far. It is a leverage strategy. And I always tell my clients, no. And it's typically a pretty long phone call, but it's the right thing to do. And the reason is this. In the option world, if you're doing some type of leverage trading, whether it's buying a call, selling a call, or selling a put spread or a call spread, if it is leveraged, meaning if you're looking to achieve 50 to 100% annualized returns, you have to understand that you can lose that same amount over the course of the year as well. And in the option space, it's a little bit different. So let's say, for example, that I want to buy XYZ tech stock, and I believe in it for the long term because I think my money is going to double every year for the next 4 years. Are there stocks that do that? Absolutely. Have I picked any of them? Absolutely. I have not. Well, besides Apple, which we talked about on this show for many years, and Mark made fun of me for that for many years, but I was right. But on the flip side, they also made fun of me for my Cisco call a few years back, and I deserved that one. But anyway, I digress. When you're trading options on something, you don't have time to get the money back. If you invest in a stock and it has a rough couple of months or couple of years, you can hold on to it and it could, in theory, come back. In the option space, and the reason why you need to be very careful in the option space when you're doing leverage style trading, like I do with my one strategy, not only do you have higher loss percentages, but you also have time value working against you, meaning that in the option world, when the money is gone, it's gone. And this is whether you're a premium seller or a premium buyer. If you sell a put spread and you lose money on it, it is gone. There's nothing waiting for it to come back except for your trading ability. If you buy a call and you lose money on it, it is gone. And it's not going to come back because time's going to run out at some point. Damn it. So with that being said, I want to encourage everybody that as you are going through your trading skill or your investing, when you're looking at different things, trying to decide, well, is this right for me? Is that right for me? Understand what you're getting into. If you're doing a buy and hold stock or a buy and hold ETF, whatever the case may be, then you have time for it to come back. If you're doing something levered with real estate, you have time for it to come back. However, the win-loss will be much more extreme, whether it's for better or for worse. In the option space, you have not only more levered wins or losses, but you also will have time that's potentially working against you. So have an understanding of that when you are choosing what way to invest and how much money to put in each investment. And that is strategy block number 1 for quarter number 4, 2018.
Crazy.
Back to you, Mark.
Crazy. Q4
What a
already.
block.
Crazy time, sir. Speaking of time, we got time for a little bit of your questions. Let's get to a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
We'd like to ask you guys questions on this segment sometimes, too. Last week, we asked you guys about which, after all the brouhaha about the CBOE Skew Index pegging above 150 for a while, we asked you, which index do you think actually had the steepest skew? Russell 2000, S&P 500, Nasdaq. If you listen closely, we gave you the answers on both TWIFO and indeed mentioned it again on Vol Views. I think people still continued to vote, though, regardless of what we said. And at the end of the day, people decided it was Russell 2000. 41% of you, even though we clearly told you. In fact, we even broke down the analysis using the quick skew on TWIFO last week. So there you go. A lot of you still think it was Russell 2000. A lot of people thought it was Russell 2000 just in general. They assumed small cap had that little bit of a steeper bid to the puts, I guess. 30% coming in for Nasdaq, which was the correct answer. 26% for S&P. Now, you can look at it a couple of different ways. Obviously, we looked at it more kind of front month, near-term skew. If you go a little bit farther out, S&P is actually the answer. So in neither of those scenarios is Russell 2000 the answer. And yet you persisted in voting for it. So well done. Here's an interesting one. Let's get to a question here from Oytrate. Oytrate, that's a good handle. He or she asking, what is a reason that someone would write in the money covered calls? Seems like a waste of time to me since you're capping all of your upside. It's an interesting one. I know some people who are hardcore devotees of covered calls who pretty much primarily write in the money covered calls. They like it for the reason that we just talked about skew. Put wing has that juice. If you're writing in the money calls, you're getting a little bit of that extra juice. Remember, you're writing covered call, you're just selling a put effectively, so you might as well get the most juice for it. So long as you're in a name you don't think is going to explode in the next few sessions, then a lot of people like to go that way, actually, get more bang for their buck kind of over time. Interesting stuff here, but some people don't like that way. I don't know who wants to. Uncle Mike, you just talk for a bit. I'll give you a rest. Mr. Meatball, are you a fan of in the money covered calls or nay?
In the money covered calls. It's basically selling a put, right? I mean, it's fine.
That's pretty much what it is.
That's exactly what it is. It's fine. I guess if you're using it as a way to try to get out of a stock, it makes a lot of sense. But if your idea is to harvest premium against something you want to long-term own, it's a terrible idea. But yeah, if that's your goal is to exit a position, then be my guest. Selling in the money covered call.
Mr. Uncle Mike, are you a fan of in the money covered calls?
I would say the same. Just have an understanding that selling an out of the money put, like let's say XYZ stocks at 52, selling the 50 put cash secured is identical to buying the stock and selling the 50 covered call, unless there's some type of weird skew involved. So it's the same thing. Typically, I would sell the put to get into the stock, and then once I'm in it, sell covered calls against it. And then if I did want to get out of it, then I would sell an in-the-money covered call. It's kind of like, a lot of people don't see the benefit of the higher skew, like what you were saying, Mark, when you get lower in the put area. And so some people don't see that right away. And that's an area with which you could benefit from when taking a look at. Now, whether that's there or not in every stock, every situation is different. But, that's my take on it.
Yeah, capital efficiency. I think you're probably better off right in the put. But for some reason, people like to go the covered call way. They have the stock maybe, and they like to go in the money just as a pure income play. They're obviously not looking for any real capital appreciation at that point. So if you want to jazz up your income, that's usually the use case I see for it. But there are some adherents to that strategy, believe it or not. Maybe it might be worth maybe a deeper dive. I have some interesting data going back a little ways on comparing and contrasting different covered call methodologies. Maybe I can see if I can dig that up for you guys. We can have a nice in-depth discussion on that topic, maybe on another show, like a boot camp or something. Let's see here. You got a comment here from a long-time listener, J3 Dingle. He's just thanking us for our discussion before. He's the guy who wrote in about the Lehman anniversary. He said, "Thanks, Mark. I really enjoyed that segment. There was so much going on at that time, I actually forgot all about the short selling ban." Yeah, you're right. It is easy. It was just an explosion of madness around that time. It is easy to forget, the different integral parts that kind of went into the whole that was that whole apocalypse there. But the short selling ban from a purely options perspective was a big deal. He goes on to write, "I remember seeing Morgan Stanley at sub $10. Bear Stearns bought for $2, then upped to 10. Citi trading for less than $1. He puts question mark, pre-reverse split. Yeah, there's a lot of that. We all can go back to those. Why didn't I buy all the Ford for $1 or whatever? There was a lot of that back then too. But you're welcome. We liked you. That was a good suggestion for a topic, and it prompted some interesting discussion. Speaking of interesting discussion, let's see if I can find another really quick one. Here's this guy, Upward Momentum. He's the one I mentioned before. He asked, what percentage of your unusual options activity trades are winners? A good question, Upward Momentum. I don't know the answer to that off the top of my head, but as I mentioned to earlier in the show, it's lower than you probably would think. That's one of the reasons why we do that segment. Obviously we're taking a non-representative sample. We're finding the interesting ones, but usually they're the larger trades of the day that are going up. So size-wise, there's some of the biggest things going up in the market at that time. So there is that little bit of a selection bias going on there. But in general, kind of the narrative of that segment has always been the size money is not always the smart money. And there's a reason for that. Is that just because you see some guy buying 20,000 near-term out-of-the-money calls doesn't mean he knows something more than you do and they think things are going to pop. Sometimes that's the case, but quite frequently it is not. Just listen to that segment over time and you'll kind of get a sense for that. But I don't have... That might be interesting. That'd be hard to have an exact number because defining a win is hard. But it's an interesting question. I'm going to guesstimate. I'm going to say 15%, maybe 20. Maybe I'm being pessimistic. Let's say 20%. 20% are winners. There we go. There's your concrete answer. Completely off the top of my head. All right, let's keep rolling into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, ladies and gents, it's time to go around the block, talk to you about what's on our radar for the rest of this week until the next time we can gather together here at Thursday at noon Central to discuss their options. Mr. Uncle Mike, we got a little bit of NAFTA or whatever the heck it's called now in the rearview mirror. Are you optimistic that the next time we gather together, the whole China thing will be done too? Why not?
Not by Thursday.
I was being a little optimistic. I was being like you. I was being very optimistic.
But I do have optimism that there will be something done in the next couple of weeks before the midterm election. So I will say that.
Interesting.
But I don't think we're going to get anything done by Thursday.
They think we'll be done by then. That would certainly be a coup in their cap if they could wrangle. They've caused a lot of uproar. If they could tamp it down by then, that would be an interesting coup. Feather in the cap for the Trump team and his ilk. Mr. Meatball, are you similarly optimistic? I'm going to guess no, just knowing you.
I think it's going to be a deal.
And then what else is on your radar, sir?
I don't see a deal. I actually see this United States, Mexico, Canada agreement as actually lengthening the amount of time. Now that we've got kind of a unified trading block, then I would be less than surprised if they move on to Europe and just let the Chinese hang, float out there by themselves. So I don't know. I think that if there's a deal to be done, the Chinese are going to have to push it, because I see no sense of urgency. I would have thought I would have seen a sense of urgency. I see zero sense of urgency out of the Trump admin to get any kind of deal.
Yeah, fortunately that music means we come to the end of the show, but you're right. I'm sure there's two different agendas. I'm sure all the people running in the midterms are like, let's make a deal. And the folks in the administration saying, let's hold our horses. But you're right. Maybe this terribly named U.S.-Mexico-Canada trade agreement, maybe that will cause them to dig in a little bit more, be a little bit more strident, saying, hey, look, we got something done here, and now we are united against you. So perhaps there's some of that. Trade wars always get messy before they're over, so maybe we haven't seen the last of the mess. I do like Uncle Mike's idea, though. I could go for a little bit of optimism. Let's go for it. Let's all decide with Uncle Mike and say he's right. All right, speaking of Uncle Mike, sir, if we think you're right, we like what you're talking about, we want to hear more about the investing, the skew, whatever it is you're talking about over there, where should we go? What should we do, sir?
By all means, book your plane tickets, drive if you're in the area, go to Raleigh-Durham to Duke University on Wednesday night, October 10th at 7 p.m. I'm going to be speaking on option income and portfolio protection strategies. For information on signing up, go to my Facebook page. It's for St. Charles Wealth Management. Sign up under the events tab. There's other ways to sign up, but that's probably the easiest for our listeners. So check it out. For all you people in the North Carolina area, in the Raleigh-Durham area, I'm coming to town. I'm excited to see you.
Yeah, it's just coming up in like a week or so. It seems like it's been on the radar for a little while, but yeah, here it is coming up. So hopefully we'll get all the tech worked out, so we could hear you, we could hear the questions from the audience. Maybe do a little bit of an extended show that day, so the kids can get their cues in as you regale them with stories of in the money covered calls. What you're talking about, right?
Absolutely. We will talk some in the money covered calls, out of the money covered calls, you name it.
Why write 20 delta when you could write a 99 delta, I ask you? That's the question you should be asking these kids. All right. They're going to be like, what the? I signed up for this. All right. And Mr. Meatball, if I want to hear maybe some why I should or should not write in the money covered calls, or learn about maybe some basic or intermediate or advanced options concepts, where should I go? What should I do?
Go to optionpitmembers.com. It's eventually going to be back to optionpit.com, but go to optionpitmembers.com right now. You can check out our blog. We're still in the middle of options. We're still in the throes of options made easy. You can sign up there. Use code 24_ off, OFF, and you can take $25 off. But it's a really good class. People are raving over the work that's being done through it, and I hope you have you get yourself signed up. Comes with a 20-minute mentoring session with yours truly. Who wouldn't want that? So go get yourself signed up.
Who indeed, sir. Check it out, optionpit.com. It's on the members tab for now. It's going to be going into the main thing pretty soon. I'm just lurking here if I can find that worksheet. Maybe I'll have to find it for next time, breaking down some interesting, maybe an interesting topic for some of your options made easy. When to go in the money, when to go out of the money, when to go at the money when you're doing your rights. Might be a fun topic for the folks. I mean, Uncle Mike's going to cover it a lot with the students there in Duke, but you might want to add on a little bit as well. Optionpit.com to learn more. And on behalf of the meatball of greasiness and the Mike of uncles, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in great questions all over the place. We have so many more. Probably do a whole show just on questions, but we get to them. We try to get to them all. So keep them coming, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.